every week for 50 something weeks, and we're super excited. Now, as that happens, as you get settled in, we're going to just jump right in. I'm going to stop the music for now. If you're enjoying it, let me know, then I can possibly find a link for you at the end of the session. But right now, we want to jump in straight. It's 4 minutes past, and I want to. So two things. One, we're recording this session, just a bit of housekeeping. We're recording this session, as you may have heard the prompt. The other one is we ask you to be kind and polite, just a bit of courtesy, even on a virtual session. Okay, it's always welcome. We have two areas we're going to be maximizing. We have our chat section, and that's what you've been using. So you've been typing your name and your business and what you're doing and where we can find you, possibly even your contact. Okay. Now, the other thing that we're going to do, use is the Q&A section. Okay. I want you to use questions there. So type your question there. But then I need you to remember that not all questions, because we have so many questions and so many people in the space right now. So we'll have questions there, and we have a technical team that's also behind the scenes, so they can respond, whether it's to the something the speaker has said, or when we get to speak about COP specifically, the questions will be answered. So look out for your answer there, but we'll do as many as we can. We'll be asking our speakers and our different people who will be interacting and our panelists, okay? So at least I know you're using the chat. There's the Q&A. Now that you know the lay of the land, I want to invite Peter Tandumia, who is not a strange face. He's a very familiar face, the friendly face of this webinar. So Peter, please open up with a quick greeting and then a word of prayer.
Many thanks, Sam. I hope you can hear me
perfectly.
Thank you very much, and a very warm welcome to our customers, and good morning. As indicated, we just want to start this session, and we want to start with a word of prayer. Let's pray. Our dear Heavenly Father, this morning we want to thank you. We want to appreciate your goodness and your mercies. Thank you for this session that you've given us. Thank you for the participants. Thank you for our customers, and thank you for the speakers for the day. As we go through the training for the day on debt management, we pray that, Lord, you'll help us to understand and also help us to implement on the things that, Lord, we're going to learn. Continue supporting our businesses, so dear Father, to grow, so that, Lord, we are able to flourish and continue to grow. As we start this session, we invite you. In Jesus' name, we do pray and give thanks.
Amen. Thank you very much. Thank you, Peter. All right, so Peter is head of non-financials and is not a strange face. Thank you so much, Peter. Thank you for a very good prayer. Now, let me get you quickly acquainted with some of the things I want to let you know. Let me ask you a quick question. So there's a bit of information on the screen. Did you know, okay, and I want you to type one word that describes how you feel about that. Did you know that in 2022, which is this year, Kenyan household loans advanced by banks are currently at 843.5 billion. What's your quick comment on that? Give me a comment in the chat. What do you think about that? A quick comment. I don't know if all of you, yeah, Priscilla says, whoa, yes. Enoch says, good, yes, very good. Let me see, what are your thoughts on this? You can type a quick word or an elaborate response. Either way, we shall receive it. Okay, so there's some facts on the screen here, like up until now, this year, we've had 843.5 billion Kenyan shillings rolled out from banks for household loans. Yeah, John says this is good to know. Iragu says, let me see. Okay, so more and more comments. And then let me just read one more. Yes, Dennis, you're very right. Dennis says it's because of the current economic situation. Yes, so it's a bit of a combination from elections to COVID to the fuel to there's so many factors. It just shows that there's a great need for debt and loan facilities, and that's what we're going to be talking about today. Okay, so your household may have been part of this, or maybe not, but either way, it just shows that there's a great need, and we need to be having these conversations, because that's how we can be able to understand how best to maximize these opportunities as and when they come, right? So again, today we're going to be talking about debt management. That's our topic. But before we get into that, quick introductions. You already had Peter Dumia. He's the head non-financial services, Cooperative Bank of Kenya. He's the one who said the prayer. Very great gentleman. My name is Sam Chimera. I have been and will continue to be your facilitator and moderator for these webinars series. I'm a part of AMI, which is African Management Institute. And with me in the background, someone who does all the communication, sends you all the emails and lets you know what you may have missed and keeps you updated and makes sure you're in the room and all this wonderful work that's happening behind the scenes. Fiona Maina, she's the marketing project coordinator. She's part of the AMI family as well. So we are super excited to come together as AMI and Coop Bank to put this opportunity and this on this platform. Just to let you know, we have great speakers ahead that are going to be helping us with today's session on debt management. We have Nino Kihagi, she's founder and CEO of Mira Health Coaching. I will be letting you know a little bit more about her later. Great person. And with us also from the Coop Bank family, we have the head of business banking, Mr. Moses Gitau himself. Okay, good. So what we're going to do is now in the chat, before we continue and hear from Moses, who's going to be just letting us know why we're here and why this subject is very important. I would like you, I already asked you to put your name and your business name, but for now, what I want you to do is type in the chat, what is your biggest consideration before taking a loan facility? What's the one thing you really consider that you're like, I need to really factor this in? Please put that in the chat. Let's see what we have. I trust that by the time everyone is here, we've all used these loans, or either you're financing a loan right now, or either you've just finished, or you're thinking about, or you're right in the middle. Okay? So put that in the chat and I'll see. So what's your biggest consideration before you get a loan? Edwin says return on time. When do we need to clear this by? Let me see. And I'm going to invite our speakers are looking at the chat right now, so I'll be asking them to make their comments. Okay, Noni and Moses will be making their comments a bit later on. So Dennis says he considers market for my products and a proper budget. I like how he said proper. Wycliffe says purpose of the loan. Let me see. There's so many comments coming in. John says what you intend to do with, John, I may be missing that. What you intend to do with it, I think that's what you wanted to say. Hagai says rate of interest. There's so many comments coming through here. How will I pay it? Purpose of the loan, cost of acquisition, repayment potential, ability to repay seems to be a big one. Okay, very good, very good. Keep those coming, and we're going to get some responses. Okay, very, very, very good. Now let's do this. So having given all that, let me quickly walk you through what you can expect from today's session. We've done a quick connect, and I want you to keep coming through with that, your name, your business, but also a comment on what is your main emphasis. What do you look at before? What do you consider most before getting into a loan situation? Okay. We're going to have a panel discussion with Noni Kihagi. I think I may have said it wrong. It's not Nino, it's Noni Kihagi. Sorry about that. And Moses Gitau. Our topic today is debt management. Okay. We'll be answering quite a few questions. As we start the session with our speakers, as soon as you get a question in your mind, I want you to type it in the Q&A section so that when it comes to the Q&A after their delivery, after the panel discussion, I can roll out as many questions as possible to our panelists, and they can help us with their skill and their expertise in the field. We'll have a Q&A, and then at the end, we'll have a call to action after hearing from Coop Bank on how they can also facilitate our process with getting debt, getting loan facilities and things like that. Okay, so essentially that's the program for the day, and I hope that you're excited about it. Now, let me just invite Moses Gitau, his head business banking. I thought it's always good to start with why are we doing this? So maybe just 2-3 minutes to introduce himself in a short way, but also to just let us know why is this program such a big emphasis for Coop Bank in terms of helping the entrepreneur. Why is this? Why are we here? Why do we keep coming back every week? Why is this important? And what can we hope to gain from this whole process? Moses, over to you, sir.
Thank you very much, Sam. Good morning, my dear
Morning,
customers.
sir.
Yeah, now, thank you, Sam, for that. And I take this opportunity to really welcome our customers to this session. This is what we call MSME webinar. It's a training program that we run as a bank just to support our customers on several topics. And recording last week, we had a topic on accounting and strategies of business, which was effectively delivered by a gentleman called Chris Oliver. And I think Peter also shared on considerations when you are borrowing from cooperative bank. This commitment from cooperative bank, I think is just to say then as a department, we've been running this for some time. And this year specifically, we have lined up very exciting topics. And today we are discussing debt management, which is very key. And I'll be glad to just understand, to also listen from our customers in terms of the feedback. What are your experiences in terms of debt management? But more importantly is to say that apart from this, we have several other sessions that we run at the branch level, what we call the business clinics, where we meet together based on the customer needs. We have several other forums that we run, what we call networking sessions in key towns, where we come have those sessions. I have seen the videos running of those networking sessions that were there before. We have what we call exposure trips, international and even locally, where we go and showcase customers who are doing well, businesses that are doing well to each other. And I think that also has helped us in terms of opening up to our customers and also for us as an institution. So our commitment to our customers then is to say that we'll continue offering this. Today's discussion of debt management is quite insightful. And I think this, in terms of debt management, Sam talked of 800 billion borrowed by households. But you can imagine also as a country, and I know that debate has been there in the recent past, as a country, we have debt of close to 8 trillion. I hear about 8 trillion, isn't it? So I think key is to say then that borrowing is necessary, but there are things then that we'll be discussing in the course of this forum to say then what do you avoid? What do you go for when you are borrowing? So I take this opportunity again to welcome you. Feel free to participate. Let's get all the feedback so that you can learn from each other. And I would encourage that we share your feedback through the chat, all the things that you want to understand, or anything that you feel that you need to have clarity. Let's share it through the chat. Thank you and welcome again. Back to you, Sam.
Very good. Thank you so much, Moses. Very, very much. So Moses is head business banking, so he's done the welcome note, but we'll be calling him back in the capacity of panelist, and I'll be telling you why we had to have him. And I know it was a bit of a debate, like, well, he's already, but he has such vast experience in this space. We said, no one better to have on this panel. So we'll be having him back. Thank you so much, Moses. All right. So before we do that, let me tell you a little bit about AMI. So this is a collaboration between CoBank and AMI. I am part of the AMI family. I'm super proud to be. So AMI is African Management Institute. All we do is enable ambitious businesses to thrive. We want to help entrepreneurs across Africa to thrive, to make the most of their businesses, to achieve their goals, to be where they want to be. And if you are an ambitious entrepreneur, then you are our person. We want to help you make the progress that you want to make. We do it through providing tools and training. So having lots of conversations like this, but also providing lots of practical tools that you can apply in your business. We've reached about 39 countries, actually this number is a bit understated, about 36,000 plus people trained across Africa through virtual programs and also face-to-face programs. There's quite a bit of content. We do many things, but there's one particular thing that we are super excited about sharing with you today. Okay, and it's called our GYB pop-ups. So that we have a program called GYB, which is Grow Your Business. Again, helping entrepreneurs grow. And close to you now, we are inviting you to visit our what we call a pop-up. It's going to be 2 particular days. Tomorrow, which is Friday 23rd, until Sunday 25th. We're going to be at the Sarit Center, Westlands, Nairobi. And that's, of course, we're going to be located just outside the Vivo Activewear store, okay, in the new wing. Now, what we try to do with this program is, again, help ambitious entrepreneurs to prosper, to thrive, to get out of the bottlenecks they're in, to be in a better place. The beautiful thing about this that you might find interesting is that we are offering a full scholarship. So we are offering entrepreneurs who are interested and passionate about moving forward, we're offering them full scholarship to this particular program. So you can apply on africanmanagers.org/GYB. In fact, what we're going to do is share a link in the chat right now. Let me see if we can do that. Yeah, well, let's do that. Yes, thank you so much, Fiona. So there's a link in the chat. It's a fully sponsored program. So I'm just going to give you a minute or two to respond to that. You can just click on the chat. What I want to make sure is that, yes, Edwin says, wow, amazing. So what I want to do is click on the chat. Before we move to the next thing, I want to make sure that all of you have got the link and that you have access to this great opportunity. Okay, so use the link and then you can consider further whether you want to apply or not. But until then, at least you have the option, you have the link. We're also going to be having this pop-up tomorrow till Sunday. We'll be at the Sarit Center, that's Westlands, Nairobi. So again, if you're looking for information, at least get the link so you can look at it later. Now, if you've got the link, type yes in the chat. That will let me know that we are moving very quickly so we can move. I see someone is using their emojis with the hearts and so on. Yes, type yes. Good. Okay. So quite a number of people have gotten the link. And perhaps we'll bring it back at the end, but that's something that we're doing. Okay. If you're passionate about your business and you see how we can help you, yes. Judy is yet to get feedback. You will be getting a response for your application, but it's good to know that some people have already applied. Okay, very good. So that's about AMI, and that's what we do. I'm super excited to partner with you. Now, I want to, without further ado, introduce our speakers for today. So we have Noni. Maybe let me start with Moses, because Moses, you already had, I was already telling you that Moses has already spoken, is in such a huge capacity in the bank. But we said, no, Moses, we need you back for this particular session, especially about debt management. Just to let you know a bit about our speakers. So Moses has about 25 plus years of banking experience. So he's been like a banker for such a long time. He's been in branch operations. We're talking about debt. He's worked as a credit officer, relationship officer, branch manager. He's been the head of microfinance and so many more roles. And he's risen up the ranks up to the position now he holds as head business banking. So there's no one better to tell us about this particular subject than Moses Gitao. So Moses is going to be up. Moses, if you could switch your video on. As I introduce Noni. So Noni Kihagi is a very enterprising lady. And what I find interesting about her story is that she started her career as an investment advisor. She's really passionate about helping people to take charge of their financial wealth. And whether young, whether old, she's interested she helps them as a trainer, as a coach, as a facilitator. Noni, there's so many things you do. She's also started a business, a company called Mira Wealth Coaching. She'll be telling us a bit about that and what she helps them to do. I know generally what she helps people to do is how to use what you have to live out your life's goal and purpose. So I'm going to ask her, what does that exactly mean and how can we benefit from that? They offer lots of courses, especially to the point of today. There's one particular course, a mini course about debt-free living. We will be getting into that as well. But right now, let me ask Noni if you could come onto video and just say a quick hello. There you are.
Hi, Sam. Hi, everyone. Thank you to AMI and COPE for having me to be part of this. I'm grateful for that. So I think, Sam, you've already introduced me very well. Personal finance is my passion project. So this is something I'm very passionate about. And I think it's very important that we learn how to use the tools and just the knowledge that's available in regards to our personal finances to make decisions that will actually help us achieve what we're looking to achieve in life. So just a summary so that I don't take too much time.
But before you, let me ask, so Mira Wealth Coaching, why Mira? Please help us understand why that name.
Why Mira Wealth? So I'll try and give the abbreviated version. So
Yeah.
as I started my journey in investment advisory. And what happened is when I left investment advisory to do the very millennial thing of, is this what I want to do with my life? I ended up making some very many horrible financial decisions, and I lost a lot. And so it surprised me that with all the knowledge that I had, I still fell prey to the, I don't know what, I'm trying to look for a polite term, but I still fell prey to various cons here and there. And I saw my life savings just dwindle away very, very quickly. So Mirror Wealth was actually first for me. It was going back to, okay, what are the principles? And I also do have a Christian background. So here the mirror was the Bible, and saying, okay, what exactly is there to said about wealth, and just seeing the very many mistakes I made. And so it was first my own journey, my own wealth journey, and recovering what I had lost, and then realizing that I represent so many people. And so I said, me with my knowledge made these mistakes. Now, what about people who are not in the finance industry? What mistakes are they making? So that's where Mirror Wealth comes. So it is a passion project.
Very good. It's let me let you know, it's very good to be at the beginning of a discussion, and then the person who is the investment advisor tells you that I have made mistakes. The rest of us feel, we can breathe out and really listen, because sometimes we look at people like you and like, imagine she has it all together. But the fact that you're here to share lessons learned and that you feel everyone's pain and you want to help us move forward. So that's really good. Thank you so much, Noni, for accepting our invitation.
Thank you for having me.
Moses?
Yes,
You have such a grand, especially I see that there's lots of aspects of credit facilities. There's lots of things that help the entrepreneur. What makes it so important to you?
Sorry, Sam, I lost you in the beginning. Maybe you could go back.
Okay, no, I just wanted to find out, having had all these years of experience, especially with the banking side, working with SMEs and helping them move forward, what makes you so passionate about working with SMEs?
Thank you, Sam. May I say that, and good morning, Noni. Good to see you. Thank you. Mine is to say that just as you introduced, I've been in financial institutions for some time, and specifically in the lending roles. And may I say it's a calling. It's a calling to empower the business people. And I think that is that's the calling that I've lived for some time. I've done it as the credit officer, as a credit officer in the branch, collecting information for the customers, putting the documentation together. And these are businesses that are not structured. This is what we call the micro enterprises, a business, a mama boga, those kind of businesses, the ones that are not structured. I've gone up to the radars doing the structured one, the small enterprises that have a bit of structures, have a bit of records. I think that has been key. But more importantly is the support on the financial side to just ensure that the customer now gets to benefit on whatever services that they get. It's not only that, because as a prudent lender, it's not only giving the lending to the customer, the issue of passing debt on and off of the debt, but of course the other aspect of the non-financial services, that what you are doing now. And I think that's a very key thing that most of the financial institutions is investing. The investment that we have done at the bank level is that every other credit officer in the branch has the ability to construct records based on what they will hear from the customer. Because for all of our time, I've had most of our customers have information somewhere in their head. They may not be written. So they will purchase, but perhaps they don't record anything. But through interviewing, through that conversation between the bank and the credit officer and the customer, they're able then to put records that will help us in terms of making a decision of whether to support or not to support. I think the other key thing in the course of that is now understanding where the money goes. And that is very key now for the business customer to say, my money is going to this project, and this is the return I expect, such that then you do not only work for the bank, but you work for the business for improvement and growth of the business that the customer is expecting.
Very good, very good. As Moses, I see you already jumping ahead of me. Because I was going to ask you, what do you consider before getting into debt? And I like that you've highlighted, where is the money going? You don't just get money for the sake of, where is the money going? Okay, but let me come back to Noni briefly. So Noni, here's the challenge. We have always been taught debt is bad. Debt is bad, don't get debt. So some of us, as soon as you say debt, we run. We run, we flee, I don't know what, from Bible terms to normal terms, we run, we flee, we hide. What's your overview on debt management? I see that also it's important, but can it be good? What makes debt good or bad? What, from your experience, especially from a facilitator, trainer, and coach in this field?
Okay, so you tend to find that debt is usually categorized into good debt and bad debt. So I think just to come from the top of it, bad debt is debt that is taken for consumption. So I'll give you an example. You've qualified for a credit card and you use your credit card to go on holiday. You use your credit card to go and buy coffee and to go buy clothes and all that. So when you're looking at debt for consumption basis, that is automatically considered bad debt. Now, when it comes to good debt is very tricky. And I want to I'll also just echo what Moses said in regards to what is the purpose for this debt you're getting into.
Yeah.
And the reason why I say good debt is tricky is we usually just say, we wrap it up in a bow and we say good debt is debt that is taken to buy assets. So when you're looking at building your wealth, you usually want to grow your asset base. And here, when you're looking at assets, these are things that you own. Yeah, so you want to go to the accounting definition of assets, but just the basic personal finance definition of assets are things that you own. And ideally, you're buying these things that you own, you're hoping they will do two things, that they will either increase in value over time, or that they will be able to earn you an income, right? Now, why I say good debt is tricky is sometimes when we're getting that debt where you say, okay, this is the business I'm entering into. And so for me to carry out my business, I need to buy 1, 2, 3, 4, 5, which will need to be financed by debt. Sometimes we end up getting into good debt emotionally and not financially. For you to get into debt.
Okay, first wait. Okay, take one. That feels like there's a trap there. So it's good debt, but made on a wrong emotional basis?
Yes, or on not a financial basis. So I'll give you an example. Let us say you need to buy a vehicle for your business, right? Mm-hmm. So good debt will say, it's for an asset that is going to help your business. Very good. What good debt will not tell you is, have you made a financial decision before you acquire the loan to get that debt? And by financial decision, I mean, have you sat down and have you done the math? Have you actually seen, what does it cost me to actually get this car? What is the actual cost of the loan? Can I afford the loan? Mm-hmm. So that is always my disclaimer with good debt. Even in as much as on the average, it would look like it's debt for my business. It's debt that's going to help my business. But can you actually financially afford to get into that debt? And why I say it's emotional sometimes, it's because sometimes we make decisions for, this is what my business needs, or this is what I need as an individual. I need to go get a loan. So based on that, you go get the loan. But have you done the actual math to actually say, this is a debt I can actually afford? I can afford to pay it back. And this is the income I expect I am going to make from this particular asset. Okay. So if you have done the math and the math balances, then that would be considered a good debt. If the math is not balancing and you go ahead and you make it, it was not a very good debt decision.
Okay. So what I hear from you, it's not enough to just have a good intention. You need to do the math. Like I've heard recently, someone said, the math needs to math.
Yes, if the math is not mathing, please do not get into it.
Okay, very good. Thank you so much, Noni. Now, let me come back to Moses. Moses, as soon as we started, we asked people, what do you consider before getting into debt? And some of the comments that we had, I'm just jumping back to some of the comments that we had were, can I pay? I'm just scrolling up to see, can I pay the loan? What is the interest? How long will it take me? And so many other questions like that. What do you tend to see as the considerations that people make before getting into this perceived good debt, as Noni was telling us? Oh, sorry, Moses, I think you're on mute. Yes, there you go.
Okay, thank you, Sam. I think just before I go to the considerations, I want to raise three factors that maybe then into why debt would be good or bad. And I think just to say that utilizing and controlling your debt effectively, I think is a very key factor to either personal or development of the business.
Mm-hmm.
I want to repeat that. Utilizing and controlling debt effectively is a key factor to either the personal or business development. The second
Moses,
Moses,
I think the trick that we find is when, you know how you said effectively.
Yes.
I think we may struggle to get what, effectively may be subjective.
I will expound it as I go on. The second thing that is to say debt is beneficial when managed well, and I think that is the effectiveness that I'm talking of. Debt is beneficial when managed well, and it's not only to business, even at personal level. And I like what Noni said earlier. The third thing is to say that debt can sink the business when neglected or mismanaged.
Right.
And I think we've seen it. Several companies that have been top
bankrupt,
and closing up because of issues of debt.
Mm-hmm.
Yeah. So those will be the things that I wanted to pass on. Then in terms of consideration, then Sam.
Yes.
And I like what is coming through the charts. A very good information there. But again, I would want to talk about four, five items that to consider. Because number one, and I think for every borrower, is availability. Is it available? I may have the needs, but is the debt available? And then the second factor which I've seen coming through is the issue of cost. What is the cost of that debt? Not only the interest, but also there are some other costs. As I go, would I go to consider a debt that is maybe going for 30%, while my return is 20%? What is the cost of that debt as compared to the return that I'm expected to make as a business? If I was to borrow, what is the return then? That will be my third item. My fourth item will be the issue of my ability to repay.
Okay.
As a borrower, do I have the ability to return that money within the time that is stipulated? I think those then will be the key factors. And of course, there is a purpose. And purpose now drives what Inoni was saying. Do I borrow for personal consumption, or do I borrow for investment in a business? So in summary, then it's availability, it's purpose, it's the cost, it's ability, and also the return.
Okay, very good. Thank you so much. Noni, allow me to ask you the same question. Now I know you do a lot of investment coaching, and you shared that you made many mistakes as you were starting. We trust by now you're making better decisions. What are you considering now before getting into an investment where your money, just sinks as you watch? What do you consider now as a better investor?
Yes, I have learned. My lessons are good for other people. I think the number one, and I think I will keep on perhaps echoing it, is not making my decisions emotionally. And here, when I talk about emotional decisions, there are two particular emotions I'm very careful about. One is fear, and the other one is greed. There is something about when you are fearful about the financial decision you're about to make, or about your financial situation, that brings desperation, that makes you just run and get a financial solution that may not actually be good for you in the long run. So that is one of the things you have to be very careful about, that even as the current economic situation is, inflation 8.53%, we look at the price of fuel. And if you're running a business, these are things that directly have an impact on you. So it's very easy to get into financial debt that may not be good for you, because you're trying to solve a short-term solution, but you're using a very long-term, you're trying to solve a short-term problem with a long-term solution. Right. So we have to be very careful. I'm usually very careful about that. The other thing is greed. There is something about, we want to sort our financial situation now. We want to make those investment returns or business returns 100-fold, 200-fold,
352-fold.
And this is now someone, if that's even in vulnerability, even me, I've done pyramid schemes.
Yeah, knowingly.
Yes. Mine was knowingly, but greed still got the better of me. And so what you end up doing is now, again, you start making financial decisions based on that.
Right.
So if someone tells you, and I'll give an example. The example that is very commonly used in Kenya, quail farming. There was the time for the quail eggs. And everyone said, if you get into the quail business, let me tell you,
you've made it.
Money. You will become midnight millionaire, right? So what happens? Some people ended up getting into debt to go and start up a business that they had no understanding about, but they were sold on the return. So you have to be very, very careful about that. What is driving you to get that particular be careful of those two emotions. The third thing is, and even when I've touched on it here in my referral to the quail business, is, do you actually have an understanding of the business that you're getting debt to go and create? Because if you do not understand the business itself, you will end up getting, whether it's investors' money or whether it is debt money, the bank's money, the circle's money, it doesn't matter. You will end up getting all that money, throwing it into a business that you didn't understand the business collapses, but you're still left with a liability to pay.
Yes. Oh, yes.
That as an individual, I look at, it's, do I understand what I am getting the money to invest in? If I do not understand, and I don't say that if you don't understand, don't get the money and don't invest, take time to learn.
Right.
So when I am making my decision, it's from a point of understanding and from a point of knowledge. And then where fear and greed are the motivating factors.
Emotions. Yes.
Take a moment to pause and actually make it a financial decision. So those are the three things that I actually look at as an individual, and that I also tell people to also look at.
Okay, very good. So, we are about halfway or a bit over the halfway line. We've talked about wisdom in terms of getting into debt before you get. Now, talk to me. I am an investor. I am a businessman. I am an entrepreneur who has made all the decisions that you people have told us not to make. I made the decision out of fear, out of greed. Moses, I forgot to consider the priorities that you told me to make. And now I'm in debt. Talk to me. How do I get out of debt? Moses, what's your comment? And then Noni.
Thank you, Sam. Getting out of debt, I think there are several options, especially when you are in a formal setup, and that is the financial setup. Okay. And one of the things that I would encourage, especially our customers, is keeping close to the person who lends to you. Be it the relationship manager, keeping close to your bank, because I'll tell you, and banks have provision. And when you hear central bank talking of a rose rate or something like that, there is provision to say that once you rent, even when you rent your own money, there's always provision to say anything can go bad. And in case it goes bad, it's not keeping away. It's just ensuring that you keep a close contact with your relationship manager, with your bank, and tell them I'm undergoing some financial challenges. So
Okay.
I think there are several things that then help us when you disclose that you are undergoing financial challenges. Is number one to say, one of the things is to match your current income with a loan repayment. Just an example to say, assuming you are the loan facility that you are paying an installment of 20,000 on monthly basis, and your current income now goes to you have been able to meet the 20,000 all through, and then after some time, then your income goes down and you are able to only get 10,000. It's important there to tell the bank or the person lending to you, can you help me in terms of structuring this debt to meet my current income? And that is what we now call restructuring of the debt. That can only happen if you're able to now discuss and communicate with your relationship manager or with your bank.
Okay.
And I think that is now what we call a debt restructure. The second thing, which is very key, sometimes we call it recapitalizing the business. And recapitalizing does not only have to come from debt. So it's issue of maybe disposing of an asset. And I think that comes on to say, I'm in debt, I have an asset that may not be making money for me. Do I dispose of this asset to ensure that I repay the debt before it becomes expensive? The third thing, which is more or less equivalent to the restructure, is change of payment dates, because some dates, for example, if you are borrowing from a bank, and you do agree with the bank that I'll be paying on 5th, and your income does not come on 5th, I think is important to say then my income comes on 10th, comes on 20th. Can you move my payment date from 5th to 20th or to 10th? That helps you now to give you a breather in terms of the repayment. The other thing that is very key, and I think this helps us in terms of that knowledge of the bank. Sometimes you can get out of debt by getting more debt. You can get out of debt by acquiring more debt. And that is what we call refinancing or topping up. You have a challenge, a cash flow crunch that can only be sorted by additional funding. So that is what in the banking language we call refinancing or topping up. To say, if I pay you $1 million today and get an additional $1 million, then I can be able to restart my business. I can be able to refinance my project. That kind of thinking. But more importantly, when it comes to banking, is issue of ensuring that all your incomes now get into the bank. Because once you do sales and divert them from the bank account, you have a problem in terms of now getting to the repayment. So the issue of ensuring that all your sales get into the bank account helps you in terms of now getting out of that debt, so that you have a timely repayment. And most debts would have a penalty in terms of lateness. So as you also sign the letter of offer, be clear on what you are charged in terms of late repayment as a customer, so that would help you avoid being late and also early collection. And finally, is the issue of debt collection. And this also perhaps I'm addressing the traders, people who do trading. You've borrowed from the bank and you do your services or you produce your goods and you extend those goods in credit to your customers, a period beyond what the bank has given you. So I think timely collection of your debts out there as a business will also be very
practice
to ensure that you have cash all the time.
Very
and lastly is to say, getting out of debt is cash. And cash is king in any business that we do. So ensure you collect cash, because a business could be profitable, but it has no cash flows.
Okay.
I think
we need liquidity. Okay.
Yes, you need liquidity.
As you can tell why we had to have Moses on this panel. He's very passionate, very informed, and he's providing all the answers we need today. Thank you so much, Moses. So Moses, on this particular question, getting out of debt, we're talking about getting out of debt. So Moses has touched, especially I feel on the business side. Noni, I know you work with individuals, you work with organizations. I want to point you towards personal debt, because there's business debt and then there's personal debt. What's your experience there, and how, if I've made a series of bad decisions, pyramid schemes and all these things, how do I get out of debt? Because there are people like me here.
Okay. So this is what I'll say. I want to echo what Moses said, and that is having a relationship with your bank or with your debt provider. And this is what I mean. If you are in trouble from a debt perspective and you owe the bank money, don't run away from the bank. Go to the bank and be very, very honest with them. And the reason why I say this is I used to work at a bank. And what I know for a fact is the bank would rather you take longer to pay off the debt than you default the debt. And so this is now where even what Moses was speaking about in terms of debt restructuring and amending dates, these are things you want to go and have a conversation with the bank. So please, that is the first thing I would say. If you find you are in over your head, please go and have a conversation with your bank and with your debt provider. The second thing I would say is be aware of the actual numbers of your debt. And this is what I mean. You can say, my debt is 10 million, for instance, right? But what is that? Break down that figure. So let's say, for example, from a personal perspective, maybe it was for an investment in investment A, investment B, and a mortgage, for instance. Break it down. Investment A, this is the loan amount. This is the amount of interest that is on this loan, and this is the amount I pay on a monthly basis. Break that down for each debt that you actually have. And the reason for this is when you're able to break it down in that way, so that, and please even include money you owe the shopkeeper, or that credit, what you owe the askari for cleaning something, all of that, break it all down. What you owe your family members who changat for you here and there.
Those ones can wait, okay. No, I'm joking. Please don't make them wait. Sorry, go on.
No, but just have a good overview of what you actually owe. And the reason for this is sometimes it is easier to pay off debt one by one by one than trying to beat the whole chunk, so that when you're saying, okay, I'm starting my debt journey. So there are two ways you can go about this. There's what is known as the debt snowball and what is known as the debt avalanche. So you choose the one that is applicable for you. So with the debt snowball, what you pretty much do is you list your debt from the smallest amount to the largest amount. And what you do is you pay the minimums that are due for each debt, but you focus on paying off the smallest one first. So any extra money you get, you're throwing it towards that small debt. So what you're doing is you start taking off the debt you owe one by one by one. And this one has a psychological impact to it because, if you have 10 debts and you tick off one, it gives you, we can do this, right?
10% of my debt has been cleared.
Yeah, so that's one way to go. And then what you find is that now the amount you are using to finance the small debt, you now add it to the other one. So you end up accumulating even the amount you can pay off towards the other debt, and then you take it off like that. So that's what is known as the debt snowball. The debt avalanche, you look at it from what is the most expensive debt I have to the least expensive debt I have, and you start to tick it off based on most expensive. So that if you have a debt that is a loan that is like 18% and one that is 12%, you will start with the 18% one. Okay. So this one makes more sense for people who are more financially inclined, who just want to see the overall cost of their debt going down. So those are the two main ways. But the other thing that I would also like to pick up that even Moses said is sometimes what you can do is you can look at it. And especially if you have a good relationship with your bank, you can see, how can I consolidate this debt that I have? Yeah. When you speak to your bank, so you total it up, you look at the cost, then you go also look at your bank, speak to your bank, and you say, okay, so let's say my total debt is 1 million shillings. And then I do the calculation and I see the average interest rate I'm paying on all these, my many small debts is maybe 18%. I can go to the bank and I can say, if you qualify,
Yeah, if you qualify.
If you qualify for the loan of 1 million, and maybe the cost that you will be paying with the bank is maybe 15%.
Mm-hmm.
Why not take the facility with the bank, use that money to pay off all this other debt, so that now your focus is this one overall cheaper loan that you will have with the bank. But then also know that the purpose of this loan that you got with the bank was to clear off your debt. So don't now you look at it and say, I have gotten an extra 1 million shillings here. Let me do what I want
decision.
to do with it.
Emotional decision, and we are back to step one.
Yeah, and this is now also what I will say. And the quicker you pay off your debt, the cheaper it is. So when you have that extra lump sum of money, go and do what is called a capital reduction with your bank and try as much as possible to clear off your loan, right? And obviously this will be applicable for some, but not for all individuals. Okay. But that is something that you also need to be cognizant of. The longer your loan tenor, the more cash expensive it actually is. So let us also be very cognizant of that, and also be cognizant of the fact that the loan, the interest rates are not fixed, they are variable. So you also want to look at how the economic situation is going, what direction the interest rates seem to be going, and make a decision also based on that. If the interest rate increases from just randomly from like 10% to 12%, are you still able to finance that loan? So those are the things you want to consider. Yeah.
Very good. I would like us to stay having this very long and very fruitful discussion, but unfortunately we may not be able to. So what I'm going to do right now is I want to turn it over to, I know there's quite a number of questions that are also already being answered by our team behind the scenes. What I wanted to come, now this one is going to be like quick fire, okay? Moses, a quick answer for this one, if you can. Would you advise me to bring my land title, my title deed, to get a loan to grow my business? Moses, what would you say? Someone is asking in the Q&A.
Thank you. It's advisable, but in renting, we say we don't rent to collateral. We rent to cash flows. So if the cash flows are not okay, then that title would not help. So we rent to collateral. We rent to cash flows, not to collateral.
Very good. Thank you. Thank you for the short and quick answer. Noni, what's your comment?
I think I will just echo what Moses said. Yeah.
Okay. I just wondered, like, Moses is in the bank. We are like, when Moses fails, we come to Noni.
This is what I would also say is, why would you, it seems very tricky. Make a financial decision there. That is my take. Yeah.
Okay, so I'm guessing yours would be to double check, is this an emotional decision that you're making? Are you making it out of fear, out of greed? Because now you're putting your land at risk. There's a lot of risk there that we need to talk about. And I think to re-echo what Moses says, have a good relationship with your banker so that you can talk through, because you may be making a bad decision that they can help you with, right? Okay, so let me move to my maybe last question, because we need to move to something else. What would you advise someone who has been listed and wants to start afresh? Someone asked that question. I want to just check if you can understand that, Moses. Does that make sense to you, the question?
Just come back again.
Someone has been listed and wants to start afresh.
Listing is not necessarily bad, and listing, I guess, is listing in CRB. Listing is not necessarily bad because it shows these days you have positive and negative listing. And it's issues of what we said earlier, the cause of the default is what you need to tell your relationship manager, is what you need to share with the bank, because you'll be listed because of several issues. Number one, default will be part of, basically you'll be listed because of default, but that default could be caused by several things. Say the business was down, we have the advent of COVID-19, which caused a number of us to have to go into default. So that explanation out to the bank is very important, and do not fear to face. I think my direct answer to that person is do not fear to face your banker because of listing. Banks have a mechanism of helping you get out of the listing, And also we do accommodate people who are listed as far as there is a genuine reason to the listing that we can be able to verify and be able to support that customer.
Okay, very good. So I find that a lot of it comes back to have a good relationship with the person who is lending you. Then they can understand, they can give you the help that you need. It's difficult when you just have a one-line question and hope for a whole book of an answer. So let's have conversations with our bankers. Okay, so we've come to the end of this particular session. Noni, I'm going to ask you, what's your top 2 tips to entrepreneurs? And I like that from your coaching, I've been to your website, you deal with personal financing and also business financing. What are your top 2 tips to people regarding this subject of debt management? Top 2 tips, and then Moses, top 2 tips, and then we'll turn it over to the next.
So my first one, I think I have been repeating it over and over. Make your debt decision a financial decision. So if it makes sense financially, you've done your background, everything works, then you may go ahead and get it. The second one is only get a loan for what you actually need. Not necessarily for what you qualify for, not necessarily for what you're approved for, but what you actually need. Do not get unnecessary debt just because you can. So those would be my top 2 tips.
Very good. Thank you so much. Moses?
Thank you, Sam. I think my key thing is debt mismatch. And I would want to explain it this way. When you are borrowing for a business or even for a personal need, there are basically 2 needs. One is investment capital, and number 2 is working capital. By working capital, I mean that the day-to-day needs in terms of operations for the business. That is stocking. If you're in the trading business, you need stocks, you need to pay salaries, that kind of that's what we call working capital. The second need is normally investment capital. You need to buy land, you need to buy a building, you need to buy some machinery for the business. So most of the things that I see my business customers doing is mismatch. When you borrow, working capital is normally short-term because you buy stock today, sell tomorrow. Investment capital is long-term because you buy a land today or you buy a house today, the return will basically take some time. So the mismatch that I'm talking of is when you now take investment capital and do it as working capital, or vice versa, take working capital and do it as investment capital. What it means is that if you borrow for working capital and you go to buy a house, your business will struggle immediately to start struggling because you have drawn that money from the business to put it in an asset that will take time to do a return. So mismatch of debt, I think, is critical. It's something that as borrowers we need to really understand when we are borrowing.
Okay, very good. Thank you so much. So again, I want to say thank you to our speakers today. Thank you, Noni. Noni does so much in terms of helping people with their finances and establish where they are on their way to where they want to be. We're going to put a link in the chat right now and just advise you it's definitely quite a resource. So there's a link in the chat. I'm just going to give a few seconds for that to be in the chat. Fiona, if you could kindly help me with that. It will be coming up shortly. And so that you can know where to access her resources. There's some free resources, there's some blogs that she writes, but also on her website, there's courses that you can take. There you go. So the link is on the chat. Noni, thank you so much for the work that you do. And thank you for responding to our invitation today.
Thank you.
And Moses as well. Thank you so much. So we're going to continue. We're going to continue with Moses. Let me get back to sharing my screen. We've come to the end of this particular bit of our session. Now, what I want us to do is, so we've had Q&A. I should take a step back. If you feel like your question has not been answered, so I mentioned already, there's a team of people that have been answering the questions in the chat and also in the Q&A. So your answer, especially if it's very specific to COPE, it has probably been answered by one of the people who are behind the scenes responding in the chat and in the Q&A. All right. So Moses here talked about an area that's very critical in terms of you need to know what loan facility you need. So what we're going to do right now is going to launch a poll and just check with you on how well you know your loan facilities. Okay. And when it comes to the match, okay. Let me see where we are. Okay. So I'm going to ask the first question. So 3 quick quizzes. There's a poll on your screen. The first one is a COPE quiz. Let's call it a COPE quiz. So if you're looking for funds to expand or restock your business, which loan would you take? Give me your response. Okay. What I'm going to do is time this maybe like about a minute so that it's really quick. Okay. Let's see. So this is a quiz to check how well you know your responses here. If you're looking for funds to expand or restock your business, which loan would you take? And after each poll, don't worry, I'll give you the right answer, and then we'll ask Moses to come back and talk us through some of those other aspects. Okay? So we're about 50% response. Okay, so a number of us are saying mortgage, others are saying asset financing. There are 3 quick quizzes, so I need to move to the next one. So if you haven't responded, you have 5 seconds. And we'll just keep it at a minute each. Okay, good. So I'm ending the poll. The response is 92% of us said working capital. Okay, if you said working capital, you are right. So congratulations, you got that answer very correct. Okay, now let me ask a second question. Let me ask a second question to just check your core knowledge. If you're looking for funds to clear an urgent but short-term business need, which loan would you go for? Is it term loan? Is it overdraft? Is it e-credit? Is it asset financing? Okay. And I think this is a very good way of checking your knowledge of the bank. Yes. So it's good to have a good relationship with your lender. In this case, Coop Bank is one of those. Okay. Again, the question is, if you're looking for funds to clear an urgent but short-term business need, which loan would you take? There are multiple answers. You can pick 1 or 2 options. Okay. Just about 10 more seconds. And after this, I'm going to turn it over to Moses to just speak a little bit about what there is in terms of from the side of COP. So about 50% of us have responded. I'm going to have about 5 seconds. So let's see. If you said, it's going to go ahead and end the poll here because it's been 1 minute. Let me show you the results. So according to the results, most of us said, some of us said term loan, some of us said overdraft, others e-credit, others asset financing. The right answer is B, is the second and the third answer is overdraft and e-credit. And I see that most of us knew that. Some of us did not. Some of us are inclined to a term loan, but that's not the right response. So you may be applying for something that's different. The third one and the last one here, this is really quick. So just single answer. If you're looking for funds to purchase a movable asset for your business, which loan would you take? Okay, which loan would you take? Let's see which loan. You're looking to purchase some movable assets for your business. Okay, would you go for overdraft? I see some people are saying overdraft. Others are saying mobile loan. Others mortgage. Just about 30 seconds. Very good. Okay. I think about 10 more seconds. 10 more seconds, let's, maybe because of time, I'm just going to go ahead and end there because we're about 60% response rate. Okay, good. So some of us said overdraft and others mobile loan. Those answers would be incorrect. If you're looking for funds to purchase a movable asset for your business, the loan that you need to be applying for is asset financing. So if you got all 3 correct, congratulations, you do know quite a bit about your bank, and that's very good. If you got any of them wrong, then it's an opportunity to engage with your banker so you can find out how else they can help you. Now, we were going to walk through the difference between good and bad loans, but I think in the conversation, we covered quite a bit of ground with that, thanks to our speakers. So right now, I want to just turn it over briefly to Moses to just walk us through some of the solutions that Coop Bank can provide. Moses, over to you if we can do it in 5 minutes, and then we take specific questions for Coop so that we can end in time. Is that all right, Moses?
Yeah, thank you. Thank you, Sam. Maybe we could go to the next, and it's basically to say a business customer, and this is how we have structured our solutions, has 3 basic needs. The first need is transactional needs. And for transaction is you are in business, you are buying and selling, you need to We have solutions that help you facilitate the buying and selling, and even the collections. Basically, we have what we call the packages. An MSME package is packaged into a gold, a silver, a bronze, or a gold, silver, or bronze. And bronze is when you are starting up, it's a startup business, somebody who is just, they are selling below 1 million shillings in terms of the monthly turnovers. Silver package is somebody who has a bit of structure. We have been there in business for some time and selling up to 10 million shillings as a business on annual basis. Then we have a good package where we have a customer who is doing up to about 50 million on monthly basis, which is up to 500,000 on yearly basis. So those packages come with several solutions. I think I'll be speaking to that. Then the second need that as a customer you require then will be in terms of payment and corrections, because once you sell, once you buy, you need to pay your supplier. Once you sell, you need to collect from your buyers. So we have what we call payment and correction solutions. So those payment and correction solutions come with the packages. So we have what we call MCOP cash on phone. We have COP till. We have what we call correction. We have COP online. We have COP kwa jirani, an agent near you. That is a bank next to your business out there in the estates, in the village. We have the POS machines. We also have Lipa na M-Pesa, where we help you terminate any funds that you pick from, you collect from M-Pesa into the business, the what we call the package account or the transaction account, and it gets back now into the cycle of the trading of the business. And then lastly, we have e-commerce that helps facilitate the buying and selling in a marketplace. Lastly, I think as a need is what we have been discussing, and I think we've talked on this for the better part of our session. The third need is what we call now the lending solutions. So you are in business, you have been able to transact, you are able to pay and collect, but you have a deficiency in terms of expanding. You want to grow the business. You have a deficiency in terms of working capital. You need an asset, just as we discussed. Then we bring in what we call the lending solutions that come there to say, and lending solutions, and I like the question that had been asked earlier over title, is to say banks even have unsecured facility. You do not necessarily have to have a title, you don't have to have a security. We consider what we call unsecured facilities, unsecured overdrafts, unsecured term loans. We also have secured, like what we talked of, you have a title and you don't want to pledge that title as security to the bank. We have what we call asset finance, just as discussed in the earlier quiz. An asset finance helps you purchase a motor vehicle, what we call a movable asset, or sometimes immovable. It will be a motor vehicle, it will be a machinery, it will be if you are in medical, the dentist, perhaps you need a dentist tool, kit, all those things that are considered as movable assets will be financed through asset financing. Then we have mortgages, and mortgages are very key in terms of property acquisition, be it a house, be it land that you want to build into the future, or build a ready-made house, or you can acquire land and later do the construction as you continue. So mortgage is part of the lending solutions that we have. And then we have trade finance. Trade finance are several solutions that facilitate you as a business person in terms of the trading. Mostly you'll have people who do trade, what we call LPO and invoice discounting. You have an order to supply and you want to be financed to supply. You have supplied and you want to be facilitated to move to the next supply. That is what we call LPO and invoice discounting. Then you have what we call letters of credit in trade finance that would also help you in terms of importation. And letters of credit these are documents, these are instruments that we give as a bank on behalf of the borrower to the person selling. And mostly it happens when we are doing international trade, although of course although it also happens locally, but when you're doing international trade, we will be able to, the bank will give comfort to the person selling to the other side that once they supply goods, the bank will pay. So those are documentations that's a document that happens between, is an instrument that is written between the bank and the bank of the seller the other side, just to help you secure the goods. The beauty of it is that you are assured of the quality, you are assured of the timely supply of goods, all those things that that you would want to see as a buyer. And lastly is what we call mobile lending, and I think is what Sam was referring to earlier as e-credit. This is a short-term facility that is available 24/7 at the comfort of your phone. You don't have to come to the bank, you can apply. And the way it works is that for this facility, we give you a score based on the way you operate your account. For you to have that, because most of us would have what we call emergencies coming up in the middle of the night, before the banks open, or even on holidays, over the weekend when the banks are not operating. You're able to borrow from the bank even up to 2 million as a business person. As an individual, you can borrow up to 500 if the salary is coming to us. And as a business, if all your turnovers are coming to your package account there that we talked of, the transactional account, then you have up to 1 million shillings that is available to you 24/7. But this is also based on a positive score, which you calculate based on the bankings that you share with the bank. So those are the three solutions: the transactional solutions, the payment and collection solutions, and of course, the lending solutions that are available for business people.
Very
Back
good.
to you, sir, and thank you.
Very good. Thank you. I think that you've really captured it in a very neat way. So if you actually have your phone and you're using a computer, you can just take a picture of this, but also this will be sent to you, because we want to educate you on how you can get the help that you need. Now, one or two people have been saying in the chat, I need to ask a particular question. Please ask the question now. So we're going to turn it over to our Q&A now, okay? So it's our Q&A, and then we'll get into a call to action, okay? Q&A, if you have a question, this is we're in good time right now, so I want to respond to some of your questions, okay? Kenneth says, I belong to, and maybe Moses and Peter, at this point I can invite you back, Peter. Moses, let me see. Kenneth says, I belong to bronze package, but would wish to move to silver package. Well, I mean, I guess the question is, what does it take to move from bronze to silver? Moses or Peter?
Yeah,
Moses, maybe?
Let me take it. That is automatic, and for that customer, we'll advise them to see the branch. Silver comes with a better offering, better benefits, higher benefits for you. So see your branch manager, see your business banker. We facilitate the movement from bronze to silver.
Very good. There's someone else asking, I have a loan of 150K and the balance remaining is 50. Can I get a top up? If I have a loan of 150, but I have balance 50, am I in position to get a top up?
I think the straight answer, yes, you are eligible to get a top up.
Okay. I guess pending a further discussion on what the terms of that 50 would look like and the future plans for the loan, I guess. Would you say, Moses?
Yes, let's say I'm saying they are eligible to qualify. They are eligible for the top up, subject to terms and conditions based on the performance of the previous loan, and also the need. We'll also look at the need, and if it's on mobile, they can apply on mobile. It's applied through the branch. They can visit the branch. Okay.
Someone else is asking, do you have products for marginalized groups who are in business? For instance, people with disabilities. Is that a package? Is there a package for people like this?
Yes, we have solutions for all people, and what the special groups like people with disability, I think is an area that as a bank we do have solutions for them. And basically, they will fall into the category of the packages that we talked of. They have their own facilities. We have enabled them in terms of operating the mobile facilities that I talked of. So we do take care of them also under the offerings that we have as a bank.
Very good. How can you help an individual who wants? So what? Yes, I thank you for Moses. The quick responses. What I'm doing is very quickly answering questions and want to take as many as possible. So put them in the chat or in the Q&A. I'll be reading them out. This one is, how can you work with someone who wants a business loan but does not have a memorandum of understanding with the bank?
Somebody who wants a business loan but does not have a memorandum of understanding. I'm not very clear, but I guess the question is based on they do not have a bank account. I think that's what maybe they are driving at.
Okay.
So if you're in business, you are operating the business, you may not be having a bank account. We do consider, subject to you opening the account with us, and we factor in the transactions of the other account elsewhere. If you are banking elsewhere, we also look at your statement, but you have to open an account with us for us to start that relationship.
Okay, very good. If I open a bank account with Coop Bank, how long does it typically take to access a loan? What are the factors that determine that period also?
I think I've sort of answered that in saying that we can also look at the other, you can open and in 2-3 months time, based on the turnovers and the statements that are coming from the other bank, we will be able to support you.
Okay, very good. Let me see, I'm just looking at the Q&A section. Just a second, Moses. So I see, Peter, I see you're responding. Maybe just go ahead and respond on the microphone. Moses has a question. Can you allow me to get a top up to boost? What are the conditions that are required to get a top up? Peter, can you speak to that a little? I see you're typing, but it may just be easier for you to switch on your mic and respond.
Yeah, thank you, Sam.
Conditions. The question is conditions for a top up.
Yeah, thank you. And I see also Moses have talked about it. Yes, we support top-ups, and majorly we just look at how then you'll be able to repay the other loan. And then we're also looking at the repayment ability currently, because we look at your cash flows. Are there still bankings coming to us? But then again, if the loan was, say, up to 1 million, then we want to give you some time to pay, maybe up to 500,000 to say 50%. And then we come in and we look at then the needs that you have, and we look at the current trading levels, and then we also able to support you. It is quite easy for you to get a top-up loan. Thank you.
Okay. Moses, a question. Peter, I guess I could just ask you to stay here. Moses, can one use a statement of another bank to be issued a loan with Coop Bank?
Yes, we do use, subject to the customer opening an account with us, a business account with us. We can consider the turnovers or the bankings in the other institutions.
Okay, very good. Peter, let me see. Peter, could you comment on the mobile? Oscar in the chat says mobile e-loans seem to have expensive interest. Would you comment on that?
Okay, I think Oscar is just to indicate, I think if there is a very convenient and a very affordable loans for business is the e-credit, because as a bank, we are still regulated by a central bank on all the lendings. So I think it's quite affordable loans. We're still regulated. The only thing we do is we also charge maybe for the insurance for that particular loan, but they are not expensive. We look at the cost that maybe you incur when you're applying, maybe physically, you might actually realize it is more affordable.
Okay,
thank you.
Very good. Rosemary, you have a question that is not clear. Kindly, I've seen what you're asking is urgent. Please make it a clear question. I will read it out right now, but kindly restate your question about financing for export solutions. What's the specific question I can ask our Moses or Peter? Well, in the meantime, Colin says, hope the government will nominate Moses and Peter as the administrators of the Hustler Fund. Okay, thank you, Collins. Let me go back to the questions. Hussein is asking, maybe Moses, Hussein is asking, can I apply for a working capital loan if I have an existing MCOP cash loan?
Yes, Hussein, it's possible as far as we are able to prove the repayment ability for the two facilities.
Okay, very good. That's a short and quick answer. Peter, someone has an account with Coop, but the LPO cannot be financed because the company he supplied has no MOU with Coop Bank. Is there a way to get around that?
Thank you, Sam, in regards to the LPO financing, I think we also look at some of the institutions that you are supplying to, and most of them we have MOUs with. My advice is that we would want to have a closer conversation with you on this so that we understand where you want to supply. And in case we are not able to finance you, then we want to look at what other alternative solutions that we have that can facilitate you also to be able to supply the LPO that you had. So maybe we could, I'll be able to share our email, business banking department email, so that then we can have a discussion and see what then we're able to do to support you. Thank you.
Okay, very good. As usual, I want to highlight the people who have been here for all the previous sessions. Others are here for the first time. One of the people who is here for the first time is Josephine Nyangao. Welcome, and thank you for staying the whole period. Josephine has a question. I have an e-loan with COP, but she defaulted. How is it possible for her to get another loan, or what are the conditions? How can she go about that? Moses? Sorry, Moses, I think you're on mute.
Sam, if you could
How can
you have
Josephine? Yes, Josephine had an e-loan and she defaulted at one particular time, but would like to get another loan. What are the conditions that she needs to consider before that can happen?
I think number one is that we look at the bankings, specifically for e-loans, we look at your bankings for the last 6 months, consistency. If you defaulted and you didn't go beyond 21 days, you are eligible. If it's beyond 21 days, I would want to invite you to talk to your branch manager, your business banker. They will advise you on the other available options. But that is if you've only defaulted beyond 21 days.
Okay, very good. Okay, so thank you very much. let me just double check. Thank you, Moses. Thank you, Peter, for all the help. Rosemary, I'm still waiting. I feel like your question is very important, but I need to ask it in a very clear way. For now, though, Moses, let me know if this makes sense to you. Rosemary is asking, I think Moses has been to my branch. She was not able to get the help that she needed. She's asking, please address my traders financing for export solutions. Maybe, Moses, I can just ask you to make a general comment on that. When it comes to traders financing for export solutions, what key things do we need to look out for?
For export solutions?
Yes.
I may not be very specific because it's not come out very clear, but to say that we also do support traders and specifically people who are exporting. And one of the things that we do, the first item that the first support that you offer is correction. Once they export, I think the payment then we facilitate through payment through the accounts, collection of the proceeds of the sales proceeds from the buyer outside there. Then in terms of now credit facilities, we have available facilities that help us in terms of supporting the exporters. So one of them is what we call supply chain financing. And if this is in case somebody is doing aggregation, buying like maybe you are doing fresh produce, I'm not clear in what business they are doing, but aggregating fresh produce or whatever items that you are aggregating from several people would help you in terms of now paying for that, would help you in terms of working capital, will help you in terms of the charges that you incur at the port while exporting or importing. So there are several facilities that come in there based on the kind of business that you are doing in export. But again, some is to invite that customer to visit our branch so that we can really understand, and also let them pick the business banking email so that we can have that discussion and we have a fruitful discussion in terms of understanding the business and the specific support that they would require. But my assurance is that we do support exporters and importers.
Very good. Fiona, I hope that was helpful. We would have loved to be more specific, but under the conditions, I hope that it was helpful. All right, so we're coming to the end, and I'll turn it over to Moses to just walk us through some call to action steps, and then we'll give you the final contacts that we have available to you for any inquiries or any information that you may need. And also after Moses, I will be sharing the links for the opportunity for the AMI opportunity for the GYB, the Grow Your Business opportunity, as well as Noni, our speaker's website. So Moses, please walk us through and then we'll be ending in about 2 or 3 minutes.
Thank you, Sam. Let me take this opportunity to thank our customers, and just as we cross some call to action in terms of let me call it the next steps, and the key thing, and I think even Noni emphasizes on this, is the issue of maintaining a close relationship with your banker, the branch manager, and these people will provide more information in terms of what would support. We'd have wanted to share a lot of information, but unfortunately time will not allow. And these materials are available in the Core Bank online MSME online portal. You can visit Core Bank online MSME portal. You can visit your bankers. You can visit your branch managers just to click on more. Number two is to ask any one of us here who do not have an MSME package. I think it will be important also to visit your branch and open an MSME package account. It gives you a lot of benefits that are tied into all what we said, the transaction, the collections and payments, and also the renting solutions. So it helps you in terms of whole summary in terms of the business. And that's why it's called an MSME package, either bronze, silver, or gold. And I think the other key thing is in terms of paying debt, please leverage on payment solutions that in cooperative bank, to ensure you bank all your incomes and ensure you have timely repayment. This helps you in terms of determination for qualification of debt. If it's e-credit, what we call the mobile loan, the transactions that come in, if it's even the bank, the facilities that you do apply in the branch, it's very important. So ensure you take advantage of payment collections that helps you in terms of receiving and paying out your money to your customers. And I think last is to ask that if you have any financial needs for whatever, for borrowing needs that you have, I invite all of us to visit our branches. We have quite some substantial facilities available for business customers and even at personal level, those who are in employment, but more so where I support the business customers. See the business bankers in the branch, the person we call a business banker in the branch, or your branch manager. They will advise you on the available solutions then that you have that can support you. Thank you, and back to you, Sam.
Very good. Thank you so much. So it's 12:30 right now. We are exactly on time. I'll just take 1 or 2 other minutes. Now in the chat, so we've had quite a beautiful session, and I especially like the fact that we got to know our bank a bit. And I'm going to be in a short while telling you a bit about what you can expect from the next session. And I think you're going to love it. But before I do that, I want to draw your attention to the chat. You're going to find 2 links. One is to the great opportunity to work with AMI. There is a full scholarship that's available for all your businesses. I would like to ask you to maximize that. So there the link is in the chat. It's africanmanagers.org/GYB, grow your business. If you'd like to apply for that, it's a full scholarship where you can get lots more training, and also, especially when it comes to non-finance. Stephen says, Sam, you have not been fair. Some of us have questions, but have not been attended to. Stephen Mogwe, I promise I have very good news for you. Okay. The second link is to a website that our guest Noni is great with guiding people through wealth management and coaching and training and facilitating from personal to business, from investment to just personal spending. Please visit the website and support her business as well. Get the help that you need from their team, their courses and so on. And now, in response to Stephen Mugwe, Stephen, I recognize that we have such a short time. We're trying to cover as much as possible. But the good news, Stephen, and everyone else who's listening and watching, the good news is next time we come together, next Thursday, we are going to dedicate that particular episode to knowing your bank. So you know how you have KYC, know your customer? Now I think the customer, it's important to know your bank. So we're going to we'll have a lot more time, about an hour, full hour, instead of just 20 minutes, full hour, just asking all kind of questions. And there's a link in the chat that Peter has posted. So that's where the portal is. Get to see what that is going to look like. And yeah, so come early next time, like you've done today. We'll spend the whole time just getting to know our bank and just asking all sorts of questions about loan facilities, about how the bank can help us. Any and every question, prepare for next week, Thursday, and we'll have a great session. Stephen, let me know if that makes you happy. I hope it does. But while you do that, final contacts, and this is the last slide for today. say thank you, like Moses has said. And if you want to get the call in touch with the bank, this is some of the detail that you will need. But also, if you'd like to get in touch with our project coordinator, Fiona Maina, who is running behind the scenes this whole program, I ask that you reach out to her. So at this point, Peter started us off with a prayer. I'm going to ask him to come back, say a prayer, and then we'll end with the close. Peter.
Many, many thanks, Sam, Moses, Noni, and our participants for such a great session. We really appreciate and we're looking forward for the next ones. Let's bow for a word of prayer. Our dear Heavenly Father, again, we really want to thank you for your goodness. You've been together with us through the session. You've given us insights, and we pray that, Lord, you will help us even manage our businesses better. May you continue to be together with us, continue to give us new insights that will continue to help us thrive in our businesses. In Jesus' name, we do pray and give thanks.
Amen. Thank you very much, and have a very good rest of the day.